Hello?
Hello?
Hey, Wall Street.
Hey, how you doing?
I'm good. How you doing today?
I'm doing all right.
You know that video we did about the reverse stock split? Jay Mata says, "Hey, Street and Alma, thank you for these videos. My girlfriend and I are really inspired to learn and trade more because of you. We have a few unrelated questions to this video. How far back should we be looking in a company's, hold on a second. Okay, in a company's stock price history? How do we differentiate real leading indicators versus noise? What do you read? What do you avoid reading in your research? What types of sentiment or news are most impactful to a stock price day to day in your opinion? How do you think the economy will be impacted for years to come because of COVID-19? Have we been pushed into the future too rapidly?" So these are all questions from Jay.
This person got a whole lot of questions. So, but good questions. So the first question is, how far back should we be looking in a company's stock price history? So it all depends on what your strategies are, right? If you are a long-term investor, then you may want to go back 5 years of history to go back to get an idea of what the stock done over a certain period of time. So if you're looking to hold on to a stock for 3 to 5 years, then I would say go back 3 to 5 years and look at the stock's historical pricing to get an idea of what the stock did and how it moved during certain events and certain times. So if there was a crisis going on, how does the stock move?
This call and your telephone number will be monitored and recorded.
If the company announced a bad earnings back 3 years ago during the first quarter, what the stock price did. And so, it depends. If you are not going to be holding on to the stock for long term, then you're going to be doing short term. Then the history going back that far really doesn't matter as much. So it all depends. To your next question, how do we differentiate real leading indicators versus noise? So, I used to teach a class called Rumors versus Truth. And
wait, you should teach a class at what?
I used to teach a class called Rumors versus Truth.
Oh, okay.
And the idea is, how do you find out what's true versus what's not? Typically, stock prices move based on rumors in the truth, right? And so what I mean by that is typically when earnings come out, right, and the company says, well, we're going to report our first quarter earnings, the stock price usually move based on what the estimates are going to be. The estimates are people gauging what they believe the company's revenue should be before the earnings are actually announced. So if people are saying that they expect the company to make $2 billion in the quarter, people will buy stock now in anticipation of the $2 billion being made and the stock price rising up. But what happens when they buy the stock now, the price rises in anticipation of the company actually coming out and making that factor true. So the leading indicator, right, versus the noise would be the people on the sideline who are making predictions about what they want the stock to be, as opposed to the company actually coming out saying, hey, we did $2 billion in sales, which then puts the prices up. So by the time the company comes out and says they had $2 billion in sales, the stock price probably have already risen based on the expectation that that's going to happen, and the price might rise a little bit more. So when you're talking about the noise is everything that has nothing to do with actually the company itself. That's all the noise. Now, that doesn't necessarily mean that the noise isn't true. It's noise nevertheless, and you're trying to figure out what's true and what's not true. So your next question is, and what do I read? I'm in prison, so I read a bunch of everything. I read a lot of stuff that you guys in the streets probably wouldn't read because you got access to computers and stuff. So you know, I got to do a lot of maneuvering. What do you avoid reading in your research? It depends on the investment. If I am making a short-term investment, I don't read a lot of long-term stuff. And if I'm making a long-term investment, I don't really pay attention to a lot of short-term stuff. So that's kind of like how I determine what information I'm reading. But as a fan of finance, I read a bunch of stuff as a fan. But I don't necessarily read a bunch of stuff if I'm going to look for an investment. I don't look at the investment. I don't look at the landscape the same way I look at it as a fan of investing. If that makes sense. What types of sentiment or news are most impactful to a stock price day to day, in your opinion? Rumors. Rumors move the stock prices, in my opinion, more than anything else. Rumors. And if you can determine what's rumor versus what's true, that'll give you a shoe-in when it comes to investing. You won't always be spot on, but you can make some pretty good picks that way. How do you think the economy will be impacted for years to come because of COVID-19? I think that people will have a bit of fatigue as it relates to their medical history and their health. And I think people will be a lot more, the fatigue part will be people really being tired of like being locked up and being cooped up. So they'll want to get back out there and get back in the economy and start spending money and start going out and start doing all these different things, which will push things higher. But what does that look like long term? And so I think long term, people will also be a lot more cautious about getting sick and about their health and being sanitized and all those sort of things. And so I think the landscape as it relates to a lot of close quarters won't be as close anymore. I think a lot of corporations and a lot of other people are going to adapt things more from a social distance perspective than they have in the past, with just having massive people in massive areas at one time. And so I think industries and services that provide for massive amounts of people to be in one place, I think those things will be affected a little bit more in the future. I don't think it'll be forever, but I think it'll affect those things, which obviously if you have a concert hall that holds 10,000 people, instead of holding 10,000 people, they may have half the capacity, which is 5,000 people, which then affects the amount of money that the concert revenue bring in. So I think stuff like that will be affected in the future. And the last question, have you been pushing into the future? Have we been pushing into the future too rapidly? I don't really understand fully what that question means when you say, have we been pushing into the future too rapidly? I don't know if you're talking about...
I think what they're saying, have we been pushed into the future too rapidly? I think they mean that with everything that's happened with the novel coronavirus, with, for example, people going to work, no longer going to work in the office, but working from home, and the same thing with schools, everything being from home. They want to know if you think that's been too fast.
Yeah, I think it's too fast. I think it's too fast, and that's what I said about fatigue. I think fatigue has set in for a lot of people, and they're tired of being at home, particularly young people. They don't have a lot of patience, or they're too young to know that, to fully understand that a dead person can't do nothing. And so, they want it right now, and they've grown up in the world where it's right now, right here, we do it, and that's it. And they don't understand, fully what patience is. And on the other hand, you got those in the economy, business leaders, economists, and federal government officials, and politicians that are trying to get the economy back and running. And because you need the economy to run. So it's trying to find this balance out between the two. The problem is that if you move too fast and this is just my opinion, if you move too fast, you run the risk of having to shut things down later down the line as opposed to taking a hit up front. And so I think it's hard to do both. If you shut the economy down for the duration that you need and you get everybody to buy into the idea of staying home and following health protocols to stem the virus, the spread of the virus, when you reopen the economy, you can reopen it for a longer duration as opposed to reopen it, closing down pockets here, closing down pockets there. I think that affects the economy more than it does doing the other way. So I think in some senses, things have been pushed a little bit too much, and things have not been adhered to enough because people want to get back to business as usual, and there isn't any business as usual. You know, that's the thing that I think people keep forgetting. Right now, there isn't any business as usual because you got over 100,000 people that have been lost their lives. So there ain't no business as usual when you got people dying. So, you know, I think right now for the individual person, they got to make those assessments for themselves. But I believe that, you know, the more cautious you are as an individual, the more that helps the man beside you. So, you know, that's my thoughts about that.
Okay. All right. And so our next question is from the video, what's up with oil stocks? And this question is asked by Wayne McIntosh. Wayne says, thank you for the information, Wall Street. I was just looking at them and about to buy. Question, what 3 penny stocks are good to invest in?
So oil stocks right now, man, are in trouble. The oil industry right now is in trouble. The industry is just super leveraged. They got a lot of debt, and they don't got a lot of money to pay a lot of that debt because of energy prices being low. So you really got to be careful. There are going to be many economists and people in the oil industry, you know, predict that there are going to be quite a few oil bankruptcies. They recently had another one filed. Noble Corporation just filed for bankruptcy protection because of heavy debt loads. So you really got to be careful, man, when you buy these oil stocks. So, you know, that's just be mindful about that. I don't have any penny stocks to recommend as it relates to, you know, like what's the hottest penny stocks. You know, like they're penny stocks are penny stocks for a reason, man. They're crap companies. I mean, you know, so there isn't any good penny stocks. You know, don't be mistaken. Just because a penny stock goes up from 20 cents to 50 cents or whatever, it doesn't make it a good penny stock. So don't be fooled by increasing prices to be bad or good. Penny stocks are crap companies for a reason. So none of them are, I don't want to say none of them are good investments, but you really got to be leery when you're buying penny stocks and just know that they're all short term. I don't recommend people buying penny stocks for a long period of time. So that's what I got to say about that.
Okay. All right. Well, we've pretty much run out of time. So thanks for the answers, Wall Street.
You're welcome. And you guys stay safe out there.